Thank you for taking time out of your busy schedule today to watch the presentation video on the United Urban Investment Corporation's financial results for the 42nd fiscal period ended November 30th, 2024. My name is Batai, President and CEO of Marubeni Reed Advisors, the asset management company of United Urban. We would like to express our sincere gratitude to our unit holders and other parties concerned for their continued support of United Urban. This financial results presentation video was created by using AI. We will strive to efficiently manage United Urban by utilizing evolving digital technology. Now I will talk about the financial results. Last year, after the lifting of the negative interest rate policy, the Japanese economy has transitioned to an inflationary economy as monetary policy was normalized. This was accompanied by an expansion of capital investment and improvements in the employment and income environment, and with the impact of the increase in inbound tourists, the Japanese economy has headed toward a moderate recovery. In the stock market, the Nikkei stock average remained steady after it hit a record high, but in the J-REIT market, investment unit prices remain stagnant. While the situation for the investment unit prices of United Urban stay severe, the operating status has been kept solid. We will continue to make every effort to achieve sustainable growth, and we ask for your continued support. Next, I would like to explain the basic policy of our midterm growth strategy. Please see page 3 of the material. The goal of United Urban's growth strategy is to maximize value for our unit holders. Under our strategy for 2025 to 2027, we aim for an annual DPU of over 8,000 yen and sustained increase in NAV as well as active distribution of gains on sales to unit holders. Specifically, we will accelerate proactive replacement of assets and return gains on sales and improve the quality of our portfolio. In addition, we will strive to increase the rent revenue of our properties by 3 to 5% in the current inflationary environment and raise profit through hands-on management and efficient operations. In terms of cash allocation, we will keep an eye on the market conditions and will maintain our strong financial base and make flexible decisions on the use of cash on hand, such as property acquisitions, acquisition of own investment units, and prepayment of borrowings. I will now elaborate the details of our basic policy. First, I will discuss asset replacement. Please go to page 4. Over the next 3 years, we will replace between 60 to 90 billion yen in assets, or approximately 10% of AUM. We will improve the quality of our portfolio by strategic replacements of properties with profit concerns due to changes in the market environment or properties that are older and properties that are unlikely to improve profits going forward. Also, we will dispose properties with unrealized gains and distribute realized gains to lift up DPU. In addition, we will allocate the proceeds from the sale of properties to property acquisitions, acquisition of own investment units, and others, with a view to improving DPU. On top of these initiatives, we will utilize our acquisition pipeline of 11 properties with a total value of approximately 80 billion yen. The acquisition pipeline is diversified in terms of property type and area, and we will leverage it for asset replacement to increase our portfolio profit and achieve an annual DPU in excess of 8,000 yen. Please continue to page 5. In our internal growth strategy to increase profits, we will raise rents of our properties through hands-on management, which we have exercised to date. With a boost of inbound tourists as a growth driver, we will raise rent revenues from hotels. Also, we will maintain high occupancy rates and raise rents for all property types, including offices, through various leasing methods in the current inflationary environment. In addition, by replacing low-profit properties with high-profit properties, we will increase rent revenues by 3 to 5% per year and expand portfolio profit. Please continue to page 6. This page discusses our financial strategy and cash allocation. As for the use of cash on hand, we always keep capital efficiency in mind and make flexible decisions on property acquisitions, acquisition of our own investment units, and prepayment of borrowings. We considered the situation where our investment unit price would remain at a NAV ratio in the lower 0.8 range and carried out the acquisition of our own investment units in November last year. We acquired 5 billion yen of our own investment units in total, or more than 1% of the market cap. We believe that the acquisition had a sufficient effect to raise DPU by 47 yen in each fiscal period. In acquiring properties, we will keep in mind that our portfolio's adjusted NOI yield and implied cap rate are the sources of DPU. Also, we will consider prepayment of borrowings in accordance with our financial condition, such as repayment period dates and LTV levels and others. Next, I will talk about our distribution policy based on these initiatives. Please go to page 7. The annual DPU from December 2023 turned 7,566 yen, which was a significant rise of 14.6% year-on-year. Over the next 3 years, we will accelerate asset replacements and expand portfolio profit. Also, we will realize unrealized gains upon the sale of properties to return such gains to our unit holders. In addition, by continuing to work on raising profits of our properties and improving capital efficiency through cash allocation, we will make progress of the basic policies of the midterm growth strategy to continue to achieve an annual DPU in excess of 8,000 yen. Through these efforts, we intend to increase unit holder value and maximize returns to unit holders. Now, I will explain the details of the financial results for the 42nd period along with the presentation material. Please see page 8. The DPU for the 42nd fiscal period turned 3,937 yen. It exceeded the DPU for the previous fiscal period and the forecast announced 6 months ago. During the 42nd fiscal period, we acquired 3 properties for 24.06 billion yen and disposed 1 property for 19.0 billion yen to replace assets. As a result, we expanded the size of our AUM while improving the quality and lowering the average building age of our portfolio and realized gain on sale of 970 million yen. In terms of internal growth, rent revenues were boosted, driven by the improved performance of hotels and the high occupancy of office buildings. We acquired approximately 3.1 billion yen of our own investment units and pushed up the DPU by 29 yen. As such, we will continue to grow the DPU by improving the profitability of our portfolio. Please proceed to page 9. Here I will talk about the main factors for the difference in DPU between 41st and 42nd fiscal period. The DPU for the 42nd fiscal period reached a record high of 3,937 yen, which was up 308 yen, or up 8.5% from the 41st fiscal period. A major factor of the difference in DPU is the net profit of Kawasaki Toshiba Building, shown in the center of the page. It includes profit from rental business for an increase of 203 yen and gain on sale for an increase of 104 yen, totaling an increase of 307 yen. Of the increase of 313 yen of total gain on sale, we will temporarily retain 208 yen and distribute 104 yen in each 43rd and 44th fiscal periods. Other factors of the difference include an increase of 122 yen for the income from new properties acquired. In the second column from the left is a decrease of 69 yen for the income decrease in property disposed. In the third column from the left, due to the absence of gains on the sale of properties in the previous period and their periodic profits, and a decrease of 51 yen for the net profit of existing properties in the third column from the right. This is explained by rent and CAM fees for a decrease of 25 yen, specifically with office buildings revenues for an increase of 16 yen, retail properties for a decrease of 32 yen due to the impact of the absence of variable rents received on an annual basis and others, and hotels for a decrease of 10 yen. Sales admin expense, non-operating profit and loss, etc., which is shown in the second column on the right, explains a decrease of 31 yen due largely to a 27 yen contraction attributed to increasing interest expenses. For your information, the acquisition of our own investment units resulted in an increase of 29 yen. Please proceed to page 10. I will explain the main factors of differences between business forecasts for the 43rd fiscal period and 44th fiscal period. The DPU for the 43rd fiscal period is forecast to reach another record high of 4,000 yen, which is up 63 yen, or up 1.6% from the 42nd fiscal period. Despite the absence of periodic profit from the sale of Kawasaki Toshiba Building, The gain on sale of Joy Park Izumagaoka, increases in variable rents from hotels and retail properties, as well as other factors are expected to contribute to this forecast. Specifically, we assume net profit of Kawasaki Toshiba Building, shown in the third column from the left on the page, to cause a decrease of 387 yen due to the absence of gain on sale and profit from its rental business. Income from new properties acquired to turn an increase of 78 yen, net profit of existing properties to come in an increase of 222 yen, and income decrease in property disposed to turn an increase of 188 yen from the gain on sale of Joy Park Izumagaoka. The main element of net profit of existing properties for an increase of 222 yen comes from rents and CAM fees for an increase of 247 yen, which is contributed by the variable rents received on an annual basis and the strong performance of hotels. Moreover, the retail properties are anticipated to increase by 29 yen and hotels to increase by 184 yen. As for other factors, sales admin expense, non-operating profit and loss, etc., is expected to cause a decrease of 56 yen due to the significant impact of a decrease of 27 yen, which is attributed to an increase in interest expenses. The effect of the acquisition of our own investment units is expected to be 18 yen. The DPU for the 44th fiscal period is forecast to be 3,650 yen, which is down 350 yen, or down 8.8% from the previous period. This is due to the absence of gain on sale of Joy Park Izumagaoka and the variable rents received on an annual basis from hotels. We aim to raise DPU by replacing assets and utilizing retained earnings. The largest factor of the difference in DPU from the 43rd is income decrease in property disposed, for a decrease of 191 yen, followed by income from new properties acquired, for an increase of 20 yen, net profit of existing properties, for a decrease of 99 yen, and sales admin expense, non-operating profit and loss, etc., for a decrease of 80 yen, which factors in the increase in interest rates. Next, I will explain asset replacement. Please see page 11. This page explains asset replacement in the 43rd fiscal period. As stated in our midterm growth strategy, we will accelerate asset replacements over the next 3 years. In asset disposition, we aim to improve the profit and quality of our portfolio by selling properties with profit concerns. In addition, we will maximize gains on sale by disposing such properties when their revenues receive a boost after tenant replacements. In the case of Joy Park Izumagaoka, we made a decision to sell when the core tenants were replaced to maximize the property's revenues. We will sell the property at 5.4 billion yen, which exceeds the appraisal value and book value, and we expect gain on sale of 560 million yen. In acquiring properties, we have aimed to purchase properties with potential for higher yields or further revenue increase from variable rents in an inflationary environment. As a result, we will have 2 retail properties and 1 healthcare property for a total acquisition price of 5.6 billion yen with an assumed NOI yield of 4.6%. With an awareness of adjusted NOI yields and implied cap rates, which are the sources of DPU, we are able to acquire properties of different asset types based on our investment policy of a diversified REIT. We will continue to expand our AUM by leveraging the acquisition pipeline shown on page 4 of the presentation material and the information network and sponsor function of the asset management company. The asset replacements conducted in the 43rd fiscal period lower the average age of our portfolio from 24 to 15 years and improve the quality of our portfolio with the NOI yield from 3.8% to 4.6%, and the adjusted NOI yield from 1.4% to 4.2%. Through such strategic asset replacements, we will continue to realize unrealized gains, remove concerns of a mid, to long-term performance deterioration, while we will strengthen the earning power and improve the quality of our portfolio. As such, we will exercise sustainable growth to increase our unitholder value and return profits on sale. Next, I will explain internal growth by property type. Please see page 12 of the presentation material. This page explains the operating status of hotels. As shown in the upper left graph, RevPAR for the 42nd fiscal period landed at a record high of 11,462 yen, which is up 12.7% from the previous period and up 5.6% from the initial forecast announced 6 months ago. This is mainly due to an increase in ADR. The recovery of international flights in regional areas and the impact of strong inbound accommodation demand contributed significantly to this result. We expect RevPAR to continue to further improve as ADR rises going forward. The upper right graph shows RevPAR of variable rent hotels by region, with pre-pandemic levels taken as 100. In the 42nd fiscal period, international flights were covered in addition to the rise in the number of domestic tourists, which significantly increased RevPAR in Okinawa and brought it back to pre-pandemic levels. Going forward, we expect that a further recovery of regular international flights becomes in line with Japan's inbound policy, which is shown in the bottom section. And as a result, we expect that it will lead to an increase in demand for accommodation in Okinawa and other regional areas, and to an increase in RevPAR which contributes to profit. In addition to the increase in RevPAR in Okinawa, we also anticipate the RevPAR in the Osaka area to rise thanks to the Expo Osaka, Kansai, to be held in April 2025. Page 13 shows the rent revenues by hotel type and the sales composition for variable rent hotels. As shown in the graph on the left side of the page, rents on an annual basis reached a record high as RevPAR rose. As for forecasts, in addition to an increase in variable rents for hotels located in Tokyo, we assume rents to rise in regional areas as well, including Osaka and Okinawa, and we expect to reach a new record high. The graph on the right side of the page shows the annual sales composition of variable rent hotels. Annual sales exceeded pre-pandemic levels, and the recovery of demand in the food and beverage sector, in addition to growth in the accommodation sector, has driven overall sales. Going forward, the growth in the accommodation sector and further recovery in the food and beverage sector are expected to improve overall hotel sales and GOP and contribute to profit. Page 14 shows the operating status of office buildings. By pursuing a variety of leasing methods, we have kept occupancy rates high. In the office markets in central Tokyo, while some properties have struggled with leasing due to the supply of large new buildings, as shown in the bar chart on the left, the occupancy rate of United Urban's office portfolio remained high at 98.7% at the end of the 42nd fiscal period, owing to flexible leasing. Although there will be some large tenant departures at some properties, the occupancy rate is expected to remain above 97% at the end of the 43rd and 44th fiscal periods, due to the needs of existing tenants for expansion and others. The right side of the page shows the status of rent revision and rent gap for office buildings. As shown in the graph of the rent revision status, by taking advantage of high occupancy, we were able to increase rents in the 42nd fiscal period more than in the previous period. We have replaced and revised rents upward at the time of renewal at many of our properties by negotiating contract terms and conditions based on detailed market analysis and rent assessments and grasping needs for expansion. As noted in the rent gap section, in addition to regional properties with large rent gaps, we have negotiated rents with individual tenants in the Tokyo metropolitan area and have been successful in significant rent increases. Page 15 shows the operating status of retail properties. We have maintained high occupancy due to shortened downtime after large tenants depart, and the occupancy rate at the end of the 42nd fiscal period turned 99.5%. There will be some large tenant departures at some properties in the 43rd fiscal period, but high occupancy is forecast to be kept with rented area expected to recover in the following period. The right side of the page shows a property where a large tenant is to be replaced and our operating policy of a property where a large tenant has decided to leave. At Ito-Yokado Aorai-Asahi, we were able to complete the retenanting without any downtime due to the succession of status from a core tenant to a new tenant. The property is scheduled to be reopened with the new tenant, Lopia, as a core. As for Shinsaibashi Oppa Honkan, the current tenant now leases the entire building and has decided to leave. The location potential of the Shinsaibashi area has been greatly enhanced by the increase in inbound tourists and the expansion of the Midasuji pedestrian walkway. The operating policy after the tenant departure is likely to include a transfer or an exchange of the land and the building, or a transfer of the building only. We think it is to be more investment efficient than the continued operation by retenanting. We will determine the policy to maximize profit from a mid to long-term perspective before the tenant's departure. Page 16 shows the operational status of residential properties. We have been able to achieve stable operations with high occupancy, mainly for residentials in the Tokyo metropolitan area and family-type residentials. Among these, rental demand for family type has been on the rise due to the prevailing price hikes in condominium, and rents are on an upward trend. We see this trend is expected to continue. As shown in the pie chart by unit type on the right side of the page, our residential portfolio is capable of attracting a wide range of demand, and we expect stable operations of residential properties going forward. Next, we will discuss financial management. Please turn to page 17. As shown in the upper left-hand corner of the page, we raised 19.4 billion yen in the 42nd fiscal year. While market interest rates have been trending upward, we have funded a certain amount from short-term borrowings and floating rate loans. Although we have been conscious of cost containment, funding costs for the period slightly increased from the previous period. As for the impact of interest rate hikes, we forecast an interest rate rise once in each of the fiscal periods for the 43rd and 44th as shown in the lower right-hand corner of the page. We will continue to maintain a stable financial base by controlling financing costs through flexible fund procurement. Finally, pages 18 and 19 of the material summarize our climate change initiatives. As you can see on page 18, in June 2023, we have set new targets for greenhouse gas emissions reduction and have studied and promoted measures to achieve these targets. Also, we have done a quantitative analysis of financial impacts in accordance with TCFD recommendations. A summary of the quantitative analysis is shown on page 19. In addition, we set an internal carbon price in December 2024. Through this, we will promote the introduction of renewable energy sources with additionality to further reduce GHG emissions. We will continue to promote efforts to achieve the new targets and reduce financial impact. For other ESG-related initiatives, please refer to pages 51 to 62 of the appendix. Also, please see the appendix for details on financial results, forecasts, and operating statuses. Thank you very much for listening.